I learned something new this week and I thought I'd share it with you guys. So recently I took conflicting trades on Aussie yen and Euro yen. I'll give an analysis of these trades just a little bit later. So I went long on Aussie yen and short on Euro yen. And as one profited, the other went into drawdown, which makes sense because the Japanese yen is partly responsible for the price action in both of those pairs. This got me thinking about how I avoid this in future, or even if I should be trying to avoid it in future. Do I choose one trade and not the other? If so, how do I choose which one's superior? Do I avoid conflicting trades, or do I just avoid correlating trades altogether? Funnily enough, that evening I sat down to read my book, which is Market Wizards by Jack Schwager, and in this chapter he was interviewing Bruce Kovner. Bruce Kovner is one of the most successful hedge fund managers ever. I think he was managing $12 billion at one point, and just like us in Guerrilla trading, he is a trend trader. In this interview, Kovner said that his worst ever year for trading was in 1981 due to a major bear market in commodities. And it was that year that he realized, he was probably managing millions at this time as well, by the way. It was that year that he realized for certain that risk management is the most important aspect of successful trading. And he partly blames correlating currencies for his losses that year. And it was from that day on, or that year on, that he decided to measure his risk on a portfolio basis rather than treating trades independently. So what a perfect time to read that, just as I was having the problem myself. And I thought it was really interesting because in Guerrilla trading, even though we're trend traders the same as Kovner, we're taught to treat trades independently. I was in Falcon trading for a couple of months before I joined Guerrilla trading, and there we're taught to avoid taking trades in separate directions. We're taught that if we are to take a trade on another pair, we should take them both in the same direction, never in different directions. Because this had piqued my interest so much, I decided to post something on the forums just to see what the other members thought. And the responses I got are pretty much the inspiration for this video, so I'll get into those now. The main point was that ignoring currency correlation is the way to go because it protects your psychology, as you aren't concerned with which trade may be superior to the other. And the second point was that taking both trades acts as a hedge, because the most you're risking is 1% on each trade, whereas your upside potential is limitless technically. And this reminded me of another lesson which I was taught at Falcon. I'm having to unlearn all these things. I didn't even realize that I could still remember them. I'm being reminded of them all as I'm trading. So another lesson that I was taught at Falcon was to utilize the DXY, which is, you might have seen Michael Bamber using it sometimes. The DXY is the United States dollar index, and it's used to measure the strength of the dollar on any given day. And I mentioned this on my forum post just to see what the others thought, and the response I got was that the DXY is irrelevant because on any given day, the euro or the CAD, whichever pair you're trading against the dollar, may show greater weakness. So to conclude, in my opinion, with the Guerrilla trading strategy, it's important to ignore currency correlation because it protects your psychology, you aren't concerned with which pair is superior, and taking all the trades that you see acts as a hedge because you don't know which one's going to work out, and the most you can lose is 1%, so why not take them all anyway? I'll just quickly do a trade analysis of the Aussie yen and Euro yen trades that I took before the end of this video. So I'll walk you guys through the Aussie yen and the Euro yen trades that I took now. So we're looking at Aussie yen here, and we had this really nice continuation pattern within this larger ascending channel. You can see we broke the previous high with a really nice three impulsive candles and classic continuation, and then a really nice retracement with a big wick on the bottom. This was textbook. It would have been better if it had come from a descending channel naturally, then I would have considered this high probability, but otherwise this was a perfect setup, really clean, really nice. Euro yen here, a bit not quite as nice. So this was actually the first reversal pattern trade that I'd ever taken. We had this another nice ascending channel, a small ascending channel on top with lots of wicks and inside bars, which I really liked the look of. We broke the low with this really nice impulse. It wasn't quite impulsive enough for me, so I waited for another impulsive candle before I set my entry. And we had this wick on the bottom, which I really wasn't a fan of, but I have a tolerance for one thing I don't like about every trade, because you're not going to find perfection in the markets. Unfortunately, price did have quite a strong retracement and actually ended up breaking the previous high, invalidating this reversal pattern. Now, price on both of these pairs did end up ranging around my entry for a while, but I managed to exit with £10 to £20 profit on both of them, so I'm quite pleased about that. Yeah, that's the end of the video. I hope you guys have gained a little bit of value from this. I'll post some kind of recap of all my trades at the end of the month, and if I figure out something else like this correlating trades, if I find any more lessons, then I'll post them for you. I'll see if I have any other news. Yes, I'm changing brokerage. I said that I deposited £2,500 in FXEM. Because I'm a melon, FXEM, you only have 1 to 30 leverage, so the most trades that I can take is 3 or 4. So yesterday, when I tried taking a 4th trade, I could only do it at half risk. So now I've got to withdraw all of my money out of FXEM and put it into IC markets. And that's why I ended up closing those trades, because normally you'd let them run, but I closed them just so I could take the money out and move it all to IC markets before the weekend so that I can start trading again on Monday, which is quite frustrating. But yeah, like I said, thanks for watching to the end of the video, and I hope you guys have a good day.